When you started your business, it was exciting. And now you have amazing clients, you have a killer team, and you are achieving your financial goals. That's the dream that's been driving you. But what often stops people from registering their businesses and formalizing their operations is the fear of the unknown, fear of messing up the paperwork. Suddenly, you're worried about directors' duties, SARS regulations, CIPC codes, anti-money laundering, counter-terrorist financing, and tax issues. You hope against hope that you do not make a mistake that could cost you later. Today, I cut through the confusion and show you exactly what you need to know to register your business and what's expected of you as a business owner in South Africa. Okay. Faced with all that potential complexity we just touched on, CIPC codes, SARS deadlines, and directors' duties, it's natural to wonder, is formally registering really worth the hassle? Let's break down exactly why pushing past that initial feeling that analysis paralysis is genuinely vital for your business's future and your own peace of mind. Think of it as less complicated admin and more as building a proper foundation for everything you're working towards. So what makes it worth facing that complexity? Firstly, credibility. Imagine you're trying to land a slightly bigger client, the one that could really move the needle for your business. Or you may need to ask your supplier for better terms to manage your cash flow. Working as Me Incorporated versus Us Pty Ltd sends a different message. Registration shows you're serious, you're a professional, and you're building something lasting. It builds crucial trust. Secondly, and honestly, this is the one that should cause some sleepless nights if you're operating informally. Liability protection. Let me paint a picture for you. Say you're running a small construction business from your bakkie. You do a job and months later there's a claim. Maybe something wasn't up to code or someone got injured. If you're not registered as a separate company like a Pty Ltd, there's no legal difference between your business debts and your personal life. Suddenly, that claim isn't just against the business, it's against you. The bond repayments on your house right here in South Africa, your car, your personal savings, they could all be potentially at risk. Registering property, especially as a company or a Pty Ltd, builds that essential legal wall. It creates a separate entity. If the business faces debts or legal issues, it's generally contained within the business structure. Your business assets, your family security are shielded. That protection alone is often worth navigating the registration process. But there's also another reason. There's access. If you've ever tried to open a dedicated business bank account without registration papers and felt that it was awkward, or maybe you needed a small loan to buy some equipment and the bank needed formal business documents that you just didn't have, the registration smooths these parts. Proper banking, better access to funding opportunities, and the ability to confidently sign formal contracts. So, looking at the flip side, the danger of not registering really hammers home that unlimited personal liability. It means your hard-earned personal assets are legally intertwined with your business risks. Every debt that the business takes on, every potential lawsuit could theoretically reach back into your personal life. So yes, there are steps involved, but when you weigh that fear of complexity against the very real risks of personal exposure and add the benefits of credibility and access, making your South African business official becomes a clear necessity for building something sustainable and secure. So you've established why formalizing and getting that protection is so important. Now, the next logical step is figuring out how. Registering isn't a one-size-fits-all process. It depends heavily on the legal structure you choose for your business. Let's briefly touch on the most common starting points. The simplest structure, and often how many ventures begin, is a sole proprietor. Basically, this means you are the business. There's no legal distinction. The good part, it's straightforward. You generally don't need to go through CIPC registration. you typically handle your business taxes under your personal SARS registration. We have a video where we go through the handling of your taxes as a sole proprietor. Check our channel for more information on that. But as a sole proprietor, you typically handle your business taxes under your personal SARS registration. The crucial downside, linking back directly to our earlier warning, as a sole proprietor, you still have unlimited personal liability. That separation that we talked about, it doesn't exist here. The business risks are your personal risks. Now, the main alternative, especially if you want that shield of legal protection, is registering a private company, what we call a PTY Ltd. This is a structure that creates that separate legal entity, a distinct legal person in the eyes of the law, and it does require formal registration with the CIPC. The CIPC is the Companies and Intellectual Property Commission, which involves more steps. But the huge advantage is that liability protection we keep emphasizing. It separates your personal world from your business world. There are other structures, but these two, sole proprietor and company, PTY Ltd, are the most frequent starting points. Because the PTY Ltd offers the significant benefits like liability protection, and because it's one that requires navigating the CIPC registration process, which is what people are often uncertain about, we'll be focusing mainly on the requirements and responsibilities involved with running a PTY Ltd for the rest of this video. Understanding the structure is key to understanding formal business requirements in South Africa. So we've landed on the PTY Ltd as our focus because of its benefits and the CIPC registration requirement. Let's tackle the CIPC process head on and demystify it. What is CIPC? It stands for the Companies and Intellectual Property Commission. Think of them as the official registrar for companies here in South Africa. They handle the paperwork, keep the official records, and make sure companies follow certain rules. Now, the registration process itself can seem daunting, especially when you hear about all the forms and jargon. But let's break down the core steps involved in registering a PTY Ltd. It's often less intimidating when you see the logical flow. First up, your company name. You need to choose a unique name for your company. CIPC needs to approve it to make sure it's not too similar to an existing registered company or it's using restricted words, for example, vulgar language. So the first practical step is checking name availability and then formally reserving your chosen name through CIPC. A quick tip here, having a couple of backup names can save you time if your first choice isn't available. Typically, CIPC will request that you have up to 4 alternative names. Next, you need to formally appoint directors. For a company in South Africa, you must have at least 1 director, which can be yourself. And the director is the person who is legally responsible for managing the company and making key decisions. CIPC requires basic information like their full names, South African ID numbers, or passport details if they're foreign national, and physical addresses. This is fairly standard information needed for official records. Then comes submitting the registration document. The key document here is the Memorandum of Incorporation, or MOI. It sounds technical, but it's essentially the company's constitution. It outlines the rules governing the company, the directors' powers, and shareholder rights. The good news is CIPC provides standard MOI templates that are perfectly suitable for most new small businesses, which really simplifies the step. You don't necessarily need a lawyer to draft a complex custom one from day one. As part of this application stage, you'll also need to select the appropriate business codes that describe your business's main activities. Basically, you're telling CIPC in a standardized way what your business actually does. Once you've submitted everything correctly, the name reservation is approved, director details are provided, the MOI is lodged, CIPC will process the application. If everything is in order, you will receive your official registration certificate. This document, often referred to by its form number, like the Core 14.3 or COR 14.3 Certificate of Registration, is your proof that your Pty Ltd is officially registered and legally exists. That's the finish line for the basic registration. So when you break it down step by step, name, directors, details, documents like the MOI and business codes, then the certificate, it becomes much more manageable. So you've got your Pty registered and your Core 14.3 in hand. Congratulations. But what happens next? It's crucial to understand that being appointed a director isn't just getting your name on a form. It comes with legal responsibilities outlined in the company. Think of it this way. The law gives your company the benefit of limited liability, separating it from you personally. In return, you, as a director, have duties to ensure the company is managed responsibly. This is not meant to scare you, but understanding these duties is key to preventing those costly mistakes that we worry about. Two core duties really stand out. First, the duty of care, skill, and diligence. This means you need to act with a level of care any reasonably diligent person would take in managing the company's affairs. You need to stay informed, understand the business, and make decisions thoughtfully, not recklessly or negligently. Second, there's your fiduciary duty. This is fundamental. It means you must always act in good faith and in the best interests of the company as a whole, not your personal interest or the interests of just one shareholder. This includes avoiding conflicts of interest where your personal benefit might clash with the company's benefit. If a potential conflict arises, you need to disclose it properly. Part of acting responsibly also includes making sure the company itself complies with relevant laws. This includes areas like financial record keeping, filing annual returns with CIPC, and adhering to regulations concerning things like anti-money laundering and counter-terrorist financing, ensuring the company isn't used for illicit purposes. It's about ensuring good governance. Understanding these responsibilities will help you to run your business ethically and protects both the company and yourself. Okay, beyond CIPC and understanding your director's duties, the next big name that often causes anxiety is SARS, the South African Revenue Service. If your business earns or spends money, engaging with SARS is non-negotiable. It's a fundamental part of operating formally. Once your company is registered with CIPC, it needs its own business tax number from SARS. The good news is SARS usually automatically registers a new company for income tax when it's created at CIPC and issues a tax number. However, it's crucial to verify this. You need to make sure that SARS has your company on their system, that all details, especially the director or registered representative, are correct. Besides the main company income tax number, you might hear about other taxes. Don't panic. You don't necessarily need all of them from day one. The main ones to be aware of are VAT, your value added tax. You are only legally required to register for VAT if your business's turnover, revenue, sales, income is likely to exceed or exceeds 1 million Rand in any 12-month period. So below that, you can register for VAT voluntarily. The other tax is PAYE. If you plan to employ staff and pay them salaries above the SARS threshold, you will need to register for PAYE to handle payroll taxes correctly. We have other videos that cover VAT and PAYE separately. You can watch those if you're interested in registering for VAT or PAYE. With CIPC registration sorted and your SARS tax number confirmed, there's one more immediate practical step that's absolutely essential: opening a dedicated business bank account. Why is this so important? It comes back to that principle of separation. You must keep your business finances completely separate from your personal finances. Mixing them is a recipe for accounting headaches. It makes it incredibly difficult to track your business performance accurately, and it can cause major issues with SARS if they ever review your records. Registration isn't the end of compliance, it's the beginning. It's a solid base upon which you build systems and habits to handle ongoing responsibilities. I hope you enjoyed the video and found the information useful. If you did, please consider leaving a like on the video and subscribing to the channel so other entrepreneurs and business owners can find this video and this information. But if you do need help with your specific circumstances and your business, feel free to reach out for a free consultation where we can discuss your specific circumstances. The information is in the description on how you can book a free consultation, and I'll be happy to hear from you. Cheers.